There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice. Brought to you by TackleTrading.com.
Hey, Tim, welcome out to the Trading Justice Podcast, episode number 20, Big 20. How are you doing today, Tim?
20. I'm doing great. That's exciting to hear that. When we hit the 35th one, I think we should do it on my 35th birthday.
I like it.
But that means we're going to have to step on the gas. That's a couple weeks out.
Well, we got to do, one a day from then?
We'll have to have a late birthday celebration.
I think we might have to liquidate the market there. Hey, I got a special guest here, Tim, otherwise known as Uncle Tim. Say hello to Katira.
Hey, Kat.
What do you say? Say hi, Tim.
Hi, Tim.
Oh, isn't that cool that
she has something to say to you, Uncle Tim.
Uh-oh.
We were talking. I was sitting on my lap last night teaching Master Trader, and Kat was hanging out. And what did you want to say to Tim? Say it loud so we can hear you. Say it loud, honey.
Fibonacci.
Did you get that?
No, what'd she say?
He needs to hear you again. You got to say it loud.
Fibonacci.
Fibonacci? Oh, Fibonacci.
We were doing some Fibonacci, weren't we? Yeah.
That is so exciting to hear.
Yeah, and she has something else to say. We were looking at Fibonacci in what again, Kat?
Elliott Wave 3.
In an Elliott Wave 3 pattern. There you go.
All right, now if Katira becomes an Elliott Wave trader, I'm going to have to change my tune on that whole topic. I can't hate on it if my 5-year-old niece is picking it up.
She's picking it up, man.
I think that's great.
She's doing it. She knows uptrends and downtrends, doesn't she?
No.
But she does know how to say the word Fibonacci and Elliott Wave 3 pattern.
That is adorable. So many of our listeners out there, Matt, have families and kids and whatnot, or people in their life that they want to share this information with. What advice do you give them? Because you're a teacher of this, and you have young children that you bring into the training a little bit naturally. How do you incorporate that? How do you bring
honestly,
it into...
I try to surround it. I try to talk the language around them. Like with Kat, she's 5 years old, and I'll sit her on my lap when I'm doing some analysis, or every now and then I'll have her sitting on my lap when I'm teaching Master Trader. She has the attention span of a 5-year-old, but I'll say, hey honey, this is Fibonacci, or honey, this is an Elliott Wave 3 pattern, and then I'll say, what did I say again? And she'll say Fibonacci, and I'll say, what did I say? It's in a what? Elliott Wave, and so I just try to surround her being 5 with the language. I start doing a little bit of pattern recognition, and I'll line up some of her blocks, right? And I'll say, okay, here's a square, and here's a triangle, and then here's a square. If this continues, honey, what's going to be next? And so that's a little bit of pattern recognition, kind of using things she knows. And so I'm just trying to surround her with it. My 12-year-old, he's interested in it. He's lazy, and I can't get him to do it on a daily basis. But he's 12, and he likes his games, and he wants to be a gamer. And I said, well, Tanyan, and this is kind of how I got him interested in it. I said, Tanyan, if you want to be a gamer your life, I get that. I respect it. I like playing games too, but you're going to need a way to make money, buddy. And he's like, yeah, I know. And I was, and I was like, well, how are you going to make money? And he's like, I don't know. And I said, well, Tan, you can learn how to trade, and you can trade from one screen, play a game on the other. And so one day last year, I put up a game on one of my screens, and I put my trading account on the other. I said, so here, Tan, look, this is kind of a game. Bulls and bears, buying and selling. Who's winning? Let's join who's ever on the winning team, so to speak. And I said, over here, we got a nice little game playing, and we can play that game as well. So, it's, and then I got my other 2 girls. My 10-year-old just wants to be a ballet dancer. She wants to be a dancer. She wants to do hip-hop and jazz and, what's some other styles? Ballet and tap and, what's the one? I don't even know what it is. But anyways, she's an amazing dancer. So, I don't have any question if she's going to be successful. My 16-year-old Tegan, she's got to learn how to do this real quick. I'll just tell you that right now. No, I think we have a responsibility to give our children an opportunity. Because you look at the markets right now, you look at the economy right now, you look at the state of America that we're in right now, and I'm very concerned coming to the future. And the more I delve into it, not to get too conspiracy tin hat on you, but the more I delve into it, I just simply believe that the future generation is going to have a much more difficult time than we did, and I want to give them all the ammunition that they can muster walking into that fight.
Oh, I agree with that 100%. I'll tell you, I was thinking about it. I do a lot of mentoring where I help people build their businesses. Mm-hmm. If I had a 12-year-old young man who loved games and I was mentoring him and trying to direct him, I would probably say, hey, let's show you how to do some day trading.
Yeah.
Whether it's in the Forex market, could be in the futures market if the capital Forex is cheaper to get into.
Absolutely.
So it probably would be Forex trading, and I would advise them that when you leave the computer, you're gone. You're out of the market. Make sure you're net clean by the time you're out, or you have a trailing stop possibly. Like that go-to-bed trade that you teach in your classes. Mm-hmm. But that would be that's so exciting and encouraging to hear. And I know that you have that with people where you and your family. That's a big part of the reason why you teach and train, is so that you can share that knowledge with the people you love and the people in your life, and also people out there who are willing to take it in. Oh, Tan Man, gonna trade the Forex market. I like it.
Yeah, I think I got him on a nice little path. I told him, listen, I'll fund your account. It'll obviously have to be under my name, but I said, I'll fund your account, but you got to prove it out first. And once I see the discipline in him and structure in him and willingness to learn the right way, put forth the effort not only in terms of his routine, but also in terms of his, learning, so going into master trader and learning how to trade. Then I'll fund his account. I'll just fund it with a couple $100, And to me, if he loses a couple $100, I don't care. But the empowerment that could instill on him is dramatic, and I think we got to give our children that opportunity. And because when you talk to adults, and honestly, I was in Seattle this past weekend teaching for Rich Dad, a little 3-day workshop. Just had an amazing group, just absolutely an amazing group. But the average age there is probably 40 years old. And I would say on a scale of 1 to 10 going into that training, the average, financial literacy in the room is probably a 1 out of 10, and honestly, that's normal. That's normal. Nobody, when I start talking about what's going on in the economy, they're blown away by it. They just don't understand it in any capacity. When I start talking about shorting stock, don't understand that. How in the world can we sell things we don't own? That's not right. When I said, well, if you can't grasp the concept of shorting stock, wait till I start talking about naked put options and credit spreads and, all this jazz. And I got to tell you a story, and I actually felt bad about this, but there was this godfather-son team, okay? So, well, it wasn't son, but his godson. And he was a younger kid, probably 18 to 20 years old, I'd say. And the godfather just, brought him up there because he was getting into some trouble where he was from. And honestly, I'm talking on day 2 about, just options basically. And I talked to the godfather quite a bit throughout the first day and a half, and just a great guy. And the godson, I kept noticing the younger gentleman, he kept walking in and out the entire day. And on one of our breaks on day 2, I went up to him. I said, "Hey, are you not into it? Why do you keep walking in and out?" And he says, "This just all sounds like bullshit to me." And I said, "Oh, okay. You care to go into some detail on that?" He's like, "Well, if it's this easy, why doesn't everybody do it?" And I'm saying, "Well, honestly, it's not this easy. You're seeing what the strategies are. We haven't even started talking about application and trade management and portfolio design, and the concepts of trading are actually easy, but when you're dealing with market behaviors and management of your emotions, that can get a little more difficult." I was trying to explain. He's like, "Oh, it's just complete BS, just complete BS." And he walks out. And he goes up to a couple groups of students just talking about trading, and they're really excited about what they're learning, and he's kind of telling them, "Oh, this is bullshit, blah blah blah, just nonsense." And I walked up to him and I said, "Well, I understand. I respect your opinion. Everybody can have their opinion. Trading isn't for everybody. I get that, but do not try to make it so that these people who are trying to learn, trying to change their life, trying to get better, trying to financially educate themselves, don't rain on their parade. Don't put that negativity in there." And he got upset and he walked away. And I went up to my manager and I said, "Hey, listen, Bo, we probably just need to invite him to leave, and because you can't let one bad apple ruin everything, right?" And so I basically had that. And honestly, Tim, he got furious. I mean, almost started a riot. Seriously, just got up in Bo's face and, F this, F that. And I just felt so bad for him. And because he came from a tough background. He obviously was getting into some problems in his personal life. And, he just was putting that on everybody else. And so I walked upstairs on the break to just talk to him and tell him, "Hey, listen, when this is right for you, seek me out. When you're ready for this. I know it's not right now, but when you're ready, seek me out. We'll do something about it." And he was so furious with everything that he basically he wouldn't talk to me. He was yelling at his godfather. And later on that day, I went up to his godfather, this guy by the name of Robert. I said, "Robert, listen, I'm very sorry about what happened, and I wish it could have been differently." And he says, "No, Matt, I just want to thank you for even trying to reach him, because I've been trying to reach him for a long time, and maybe he needed to hear some of this. Maybe he needed to hear that, what was going on and whatnot." And he says, I'll stay in touch, keep in touch and whatnot." He handed me his card, and just a great guy. And I respected what he was trying to do and whatnot. But it was just it's honestly, it's kind of, when you hear about what's happening in the economy, especially for the younger generation, it's not easy to hear.
Well, I'll tell you, there are several things that it makes me think of, and with the story, and I think you did the right thing, because I've gotten to the point in my life where I don't have time for negativity.
Nope,
I just don't have time for it. I want to surround myself with people who are ambitious and working towards progress and success and their goals and all those kind of things. Mm-hmm. I just don't want to surround myself with negativity, and you can't beg people to change it. And it takes time to change your perspective. I mean, you remember being 20. And by the way, it's not just about being young, by the way. You could find somebody with the same attitude at 40, 50, 60, 80.
You can, absolutely.
So there's one part. And the other part is, this happens to people a lot out there, whether it's trading or other businesses. They let people with negative attitudes share their opinions and influence them when they shouldn't.
No, it's true. You're absolutely right.
Why would you listen to somebody that's not successful at the business you're starting? You're starting a little retail shop, or you're starting a franchise, or you're getting into a multi-level marketing, direct marketing type of business or something. And somebody who has not had success or experience with those things, they'll tell you, "Oh, that's a waste of time," or that. Don't listen to those people. Find people who have succeeded and let them influence you.
How many times in your life have you met somebody who, wanted to change their lives, wanted to learn how to invest, wanted to learn how to trade, and yet they go home, or they go to the store, or they go to their buddy's house, and they listen to somebody's other opinion that has no success in trading, no success in investing, and they hear them say something like, "Oh, trading is just gambling. It's just gambling your money, and this is a scam," or trading is a scam, and Wall Street cheats, and all this stuff, and then all of a sudden they're like, "Yeah, they're right," It's just, it's utterly ridiculous that you would listen to people that have no bearing in truth about what the financial markets are. It can be gambling. If you act like you're going to a damn casino. If you go out there and you say, "Yeah, let's go buy some out-of-the-money call options because, we're going to make a lot of money," yeah, you're probably going to lose. That's the reality. If you get a newsletter from some source that you don't know their trading style, and you say, "Hey, listen, that makes sense. It made sense to that guy. He has the ability to write a newsletter. I might as well go do it as well. I might as well go make that trade. Yeah, then you're gambling. If you get a call from some Wall Street firm or institution saying, hey, listen, we got this stock, we got this mutual fund, and we're looking, it's a really hot stock, then yeah, you might be gambling. Or, if you get Jordan Belfort giving you a call back in the, mid-90s saying, hey, I got this penny stock for you, yeah, you're gambling. That doesn't mean traders gamble. That doesn't mean Wall Street gambles. That means you as a consumer, based on your ignorance, are putting your money at risk. And it's not a shock to see them lose money in that capacity. In fact, that's what should happen. And the last thing I'll say about the gambler's mentality is the number one gamble in the entire financial market is their 401ks.
Yeah, it completely is, because you're just leaving it out there without any control or the ability to hedge it or protect it. Yeah.
No protection.
I agree.
I was looking at this guy's portfolio on Friday last week, and he had a little bit of money. He had a few $100,000 and whatnot. And I said, the number one problem I see whenever I do this is the fact that you have no protection. You have more money, more equity here than you have in your home, but you spend insurance every single month on protecting your home. But you have no insurance in your portfolio. And if the crash does occur, which I fully believe it will, if the crash does occur, then you're going to lose a significant amount of money. The first thing you got to do is protect what's yours. You worked hard for it. You got to protect what's yours.
Yeah. Yeah, and I'm thinking about the whole thing about starting a trading business. It's like if you were going to learn how to be a pilot, would you get in a plane without any training?
No.
Would you jump into a plane and take it up in the air and put your life at risk without any training at all? No. So these people that get into the markets and fail, and failure does happen in the markets, even with best intentions, it can happen.
With great traders, we have failing trades.
Sure.
Yeah, I got hammered on Friday.
Yeah.
Freaking Fed.
Yeah, the Fed. But, the thing about it is you have to get the proper money management training. And so going back to Tanyan, the young man who is going to start the Forex stuff, the very first thing he needs to do is learn his max risk tolerance per trade,
No, well, get education.
Yeah.
I mean, I tell people that, but that's also what I told my son. That's what I'm trying to do with my 5-year-old, is trying to educate them first. And you know what? I was talking to the group, and I said this to the group. I said, you guys, you might have the best of intentions out there. You might be able to go out there, change your life without proper system, proper education. But the reality is, I haven't really met anybody that has made huge success in financial world without education in some capacity. Whether it's being mentored by a Wall Street trader or getting into a Wall Street firm and going through the growing pains of learning what the pros do, or whether it's learning from somebody like Rich Dad or something, or from another trader. So you can't learn trading from a book. You learn trading from other traders. That's how you learn. And so it's important to surround yourself. Kind of going back to what you were saying about negativity. We're too old to deal with negativity. We're too old to really, deal with anything like that. You got to surround yourself with people who are like you, ambitious, positive mindset, that when negative things happen, and negative things happen to each and every one of us in life, it's called life, for crying out loud. But at the same time, you got to have the ability to surround yourself with people that will help you through the fire, that won't put you down, that will uplift you, that will drive you, that will push you, that want you to be successful. There are so many people in life. I mean, Tim, how many people in your life personally do you think truly, truly, truly want you to be more successful than them?
That's a tough question. I believe that because it's natural to be jealous and
envious.
Here's the problem, is when somebody doesn't want to push, maybe they're struggling, depression, anxiety, just life stuff, and they're just barely getting through their work week to begin with because they don't like their job. It's kind of hard for somebody like that who doesn't really want to be ambitious to see somebody else doing well. I understand the psychology behind it, but I don't have time for it.
Honestly, give me a percentage. Give me the percentage of people in your life, friends, family, colleagues, all of it, that really, truly want you to be more successful than them? Would be well, I shouldn't say that, but want you to find true success, whether it's more to them, less than them, but want you to have just utter financial success.
Well, I tend to surround myself with awesome people, so I'm going to assume it's like
people.
90%. So
you're also a very, very big idealist as well.
Yes.
You think the best in people. You think everybody is, just like you and just, happy and giddy and positive and whatnot. I'm willing to say the number's closer to 10.
They say that. I've seen a lot of studies. In fact, I'm trying to even think of the psychological term for it. People have a natural built-in jealousy.
I can give you a psychological term. It's called haters. That's the psychological term. Haters. Cat Williams taught me that on his stand-up. He said, in fact, if you ain't got 20 haters on you by the end of tonight, you're not pushing hard enough. That's the truth. I mean, we have a lot of people in life that secretly, and maybe they don't consciously think about it, right? Maybe they don't go out of their way and say, "Oh, I hope Tim Justice fails. I hope Matt Justice. I hope Trading Justice is a roaring failure." Maybe they're not like that. By the way, they're wrong. This podcast, 5-star podcast, rate it on iTunes. It's kick and tell out there, guys. Changing lives, taking names. We're going to continue to drive. Check us out at tradingjustice.com. Check out the podcast on iTunes. Give us a 5-star rating. How about the timing of that drop right there, by the way?
I don't know what my job is if I'm not doing the drops, though.
You missed. It was too easy. It was right there. I was talking about haters, and I was talking about people hating on, the Trading Justice, because I know they're out there as well, and we're going to continue to drive. Once again, check us out. No, I'm just totally kidding.
I'll give you an example of this. I have a great example of what you're talking about. A long time ago, it's been 15 years since this happened, but I knew a man who owned and ran a convenience store. And he could not figure out why it wasn't as profitable as he thought it should be. He bought it. He started it. It was in a small town near where we grew up. Mm-hmm. And it's not who you're thinking of, by the way. Different guy in Wellington. But he actually hired an outside consultant. There are two great things in this story. And the first one is he hired somebody with professional knowledge on how to help him with his business. How many small business people fail to ever do that? Just too cheap to do that. To get somebody to come in and say, this is an outside perspective of what you can change to get better. Okay? That's the first good thing he did. He brought a guy in from out of the area to come in and evaluate his business. He got back and he gave him this advice. And he said, the biggest problem in your business right now is that you're behind the cash register. And you're a successful person, and people don't want to support that. That's exactly the advice the economic advisor gave him. And so the guy stepped away from running the day-to-day business, still ran the big picture stuff, hired some local, people to run the register, be the face of the business, branded it, gave it an image. His business nearly doubled over the next year.
Really?
Yep. It was I'll never forget the story because he had everything. It was a retail business, and I've never run a retail business, so I don't know everything about it. But one of the problems was people didn't feel comfortable going in and supporting the owner. So they wanted to go in and buy from somebody else, I guess, but it worked for him. Just an anecdotal story, but I think it fits a little bit in what we're talking about. Is that there are a lot of people out there who have a hard time seeing you succeed. So when you're getting that little bit of advice, or so-called advice, oh man, I'll tell you, I don't think I'd take it. Maybe if you take it from a neutral arbiter from an outside perspective, that's different. A professional opinion in that field is very different than your just buddy that you're golfing with saying, "Oh, don't start that because that's not going to work." And I'm not just talking about trading. I know here in Utah, it's very popular, these network marketing things, Matt.
Yeah.
These companies that do direct marketing. And there have been times in my life where I'm just like, I don't think I could do that. And I still haven't been involved in one of those in a long, long time. But I look at them now with my attitude towards business and life, and I'm cheering them on. Great. If you can sell me something that is reasonably priced, why wouldn't I want you to do well?
No,
You know?
I agree with that. You agree with that. We all agree with that. The problem is, it's there's not a whole lot of people. And kind of your story about the Wellington guy, it makes so much sense. But have you ever heard of a guy by the name Nathan Fielder?
Maybe from where we grew up.
No.
No,
He's got this show on Comedy Central, okay? And basically what he does is he goes in disguise, right? Incognito, so to speak. He goes into these small businesses, and kind of like what your guy in Wellington did, they hire this guy as a professional business consultant to improve the business, okay? And it's a show on Comedy Central. I'll get you the name in a second. I'm going to play a video clip for you, all right?
Mm-hmm.
And
Okay.
I want you to listen to it kind of and see what this is. Real people, real businesses, okay? Taking the advice of some professional that is there just not to con them, but just to kind of create this comedy about ideas and whatnot, okay? So I'm going to play this video and tell me what you think, all right?
Let's roll.
This is Nathan for you. Frozen yogurt is one of the most popular treats in America, enjoyed by everyone, like Asian women, or just a regular guy in the neighborhood.
Oh, I'm just a regular guy in the neighborhood here.
But that popularity doesn't mean much if your yogurt shop is empty. Nick Batista is the manager of Yogurt Haven in Eagle Rock, California, and lately he's been in desperate need of customers.
It would be a plus if we got more traffic going.
Matt,
So
pause
I
it for a
paid him a
second.
visit.
Pause it for a second.
Yeah.
Okay, so let me make sure I understand the stage. Because I've seen one of these episodes. Now that I heard his voice, I picked it out just instantly. He did one with Starbucks.
Yeah, it's called Dumb Starbucks.
Yeah, it was great.
Yeah.
I loved it. I watched the whole thing.
It's what
me laugh.
It's what made him famous.
Yeah.
Is that Dumb Starbucks ones? He's actually on season 2, and it's called Nathan for You. That's the show. That's the name of the show. And the guy's a genius. I mean,
He's really funny.
Yeah.
And he does have a business background, doesn't he?
yes, he does. He
Like
does.
a degree in economics or
Yeah,
something.
he's a
something. I
comedian
don't
as
know.
well. But in this scene here, and I'm not going to play the whole scene, but in this scene here, he comes into this yogurt shop and he basically says to the owner of the yogurt shop, "Your business is failing. I'm here. You've hired me to help you, kind of improve your business." And basically, what Nathan Fielder says to the shop owners, he says, "You got to come up with something unique and different." Right? You got to come up with something unique and different. And how many times in life have we heard that? Very cliched. So basically, the idea that he sells to this guy is you got to create a poop flavored ice cream. And the guy just takes it hook, line, and sinker. They create this poop flavored ice cream. They start selling it, and obviously, I mean, you kind of know the end result there, right? The end
Doesn't work.
It doesn't work here. And let me go through some tests.
Yeah, let's hear some more.
Here's another scene.
You could make yogurt.
I didn't want to be the first to try it, but I needed to know if the taste was accurate, so I
That's the
conducted a
poop.
taste test with some strangers. So I'd like everyone to try the frozen yogurt in front of you.
You should see the look, dude. I share my screen
What does it
with you.
taste like?
Oh, this is awful.
Peppermint.
Peppermint?
Kind of like licorice.
Peppermint.
Yeah, closer.
It's got some other familiar flavors in there, but I can't.
What does this taste like to you?
Poo. I don't know.
Really?
Yeah, it does actually. What I would think of.
What were you basing that on?
Well, clearly the look helps.
Right.
The color.
Oh.
Because it was
Normal.
amazing how quick you got it. So I was like,
The other guy
I was
said
like, oh, maybe
licorice.
she's has
Yeah, no.
tried it, or
No,
because it's
no.
based on real poo.
Never tried it.
Oh,
I mean,
take
it's
this off
okay.
of my screen. I can't. This is making me cringe.
But come on now. I mean, think
It's
about
funny.
it. It is
Yeah.
so insane that we go and we just take this hook, line, and sinker, saying, you know what, we need to think differently, outside the box, so to speak. And this Nathan Fielder comes in and says, let's create this poo flavored ice cream, and they did it, and they sold it to consumers in the thing, and it's hilarious. It's hilarious. But that kind of reminded me of what you were talking about with your convenience store clerk. Or owner that basically said, hey, listen, my business is failing. I need to find somebody. The only thing I would suggest is don't hire Nathan Fielder.
From Comedy Central.
From Comedy Central. That's probably a dead giveaway there. Dead giveaway. If Comedy Central is attached to it, you're done, right? But they got the dumb Starbucks one too. It's a funny show. It just kind of reminded me of that. If and I certainly believe you surround yourself with knowledgeable, successful people. We got to do that in trading the same way we got to do that in business. Create this nice power team. Just don't put Comedy Central on that power team.
I'm still cringing, even the thought of this. I mean,
it was real. I don't know if you saw it, but it came from I don't know if it was some type of feces, animal feces.
Don't just stop.
Yeah,
just stop. But what I do find enjoy about this kid that does these shows is he has the most just serious deadpan face. And even though, he just is doing the most ridiculous things, you wouldn't tell that he doesn't take it 100% seriously. He's just pushing the whole thing.
Oh, yeah. Look at this. Just one last thing. That's the owner right there.
So what flavors did you get?
I got the vanilla, the Euro tart, and the poo flavor.
Oh, the poo. That was my least favorite.
Dude, it said poo flavored yogurt on the screen, right? And people were literally taking it and they were pouring poo flavored yogurt. I don't get some people. It's those people who pour poo flavored yogurt that are gamblers in the financial markets.
I don't know how you're tying that together. I just am cringing. I need a mental reset button. Yeah.
I thought it was successful. I thought it was. Coming back, you know who else has poo flavored ice cream?
The Federal
Central Bank.
Is that what they serve in the lobby?
That's what they serve in the lobby. That's the only thing they serve in the lobby. They reserve the best for themselves. I want to talk about Jackson Hole. Jackson Hole, Wyoming is the place. It's a beautiful country, by the way. Beautiful scenery. Every August for 3 days, the Federal Central Bank, the heads of states, and the central bank presidents from other central banks in the world, such as the ECB, the Bank of Japan, they meet to discuss monetary policy. And a couple highlights out of the Federal Central Bank meeting just this past one. Number one, you had a couple speeches, and Janet Yellen spoke quite a bit about the labor market. Now, Tim, regardless of what the labor market is and is not, is it the central bank's role to fix the labor market, or is that the free market's role?
Interesting you bring this up, because it's exactly what I wanted to talk about today. So I'm glad that we're getting into it a little bit. Let me kind of set the stage a little bit for those out there. Now, the first thing I'll tell you is that when you're new to trading, I know it's intimidating to hear and have conversations about the economy and the macro, economic impact of this and that. It just sounds like too much, and I understand that, but embrace it, because the Federal Reserve is the player in the game. They're the bus driver, okay, taking us all to school. So we need to know if they're, driving it safely and how they're making decisions, or if they've been hitting the bottle before they picked us up in the morning. We have to keep an eye on them as traders, no matter what, whether it impacts your day-to-day this week or whether it eventually just impacts the economy. We have to keep an eye on it. Matt, I went back today and I read the three most recent communications the Fed gave us as public traders.
Okay.
And you can actually get all of the information at federalreserve.gov. Okay? All of these things are there available. They're on the website. They're public releases. The first thing I thought about after I read them is I wanted to set an over-under with you. How many lawyers do you think they employ to read through these before they release them?
Oh, over-under. Give me an over-under.
14?
Over.
I bet it's over too.
Yeah.
I can't even imagine.
Oh,
you know, reading this stuff, it reads just like legal documentation.
There's probably 14 lawyers per Fed member.
Probably.
Yeah.
Yeah, it's just crazy. And, you know, if you think about that lawyer speak and the way they're communicating, every word is intentionally chosen. You know, so think about 3 communications. This is from one meeting cycle and a very special yearly event. The first meeting happened on the 30th of July. That was the last time we had an FOMC statement. So what that is, Matt, is they all get together for a couple of days. They talk about the economy, and then at 2 o'clock Eastern time, they release a statement. This statement is about 6 or 7 paragraphs long. The second time they communicated with us were the FOMC meeting minutes. Now, the length of this can range, but this was on the 20th of August. It's always 21 days after the statement, 3 weeks, and this was an 11-page document that explained their statement. So it took them 3 weeks to put this together, right?
Gotcha.
And every word is intentionally chosen. They go over data. If you're an economist, nerd, you like this kind of stuff. It's enjoyable to read. I like it. I don't mind it. I wouldn't have said that 6 or 7 years ago when I was still just learning some of the intricacies of all of it. Mm-hmm. But the longer I've been reading these statements and trading and understanding the market, I like the macroeconomic stuff. It makes me more confident as a trader.
Well, I also think you have to be aware of what's going on out there, and be aware of what the role of the central bank is, whether you disagree with it or not.
Yeah. And then the third thing I read was the actual speech that Chair Yellen gave on Friday. And that happens, I think Jackson Hole's just the one time a year, right?
Yeah, Jackson Hole's one time a year.
And she gave the speech, and the speech was released to the public the second she started speaking. So we could pour over it, and the market reacted. The market can handle it and deal with it during the trading day while she is speaking, and then there's, I believe, a short Q&A at the end.
Yes.
But really, nothing that they said gave us any indication of exactly when. They keep leaving the back door open in case they got to run out, They're always leaving that open window to be able to do whatever they choose to do in the future. And I think that's where markets aren't really taking their cue from the Fed yet, but they will very soon once action starts to happen. Now, you asked me a very specific question. What is their mandate? Mm-hmm. Surprise, surprise, there's actually their mission, and I'm going to read this to you. There's only 4 points. This is the shortest communication. Their mission is right on the website, okay? They're supposed to conduct the nation's monetary policy by influencing the monetary and credit conditions in the economy. And that's for maximum employment, stable prices, and long-term interest rates.
Okay.
They supervise and regulate banking institutions. They maintain the stability of the financial system by containing systemic risk. They use that phrase. That may arise from financial markets, and they provide financial services to depository institutions like the government, foreign official institutions, including in playing a major role in operating the nation's payment system. Okay. Let me explain that in layman's terms. They're the big dog, and they get to control all of it. They're the ones who affect interest rate policy, and they specifically have said they try to contain the labor market, that's jobs, people, and also price stability. Now, Matt, let me ask you a question. After 6 years since the Great Recession, that's the common popular term for it, 7 and 8.
Yes.
Have they achieved labor market stability?
Oh, heavens no. Heavens no.
And they know it.
And not only, well, here's the problem though, T. I don't think the Federal Central Bank can achieve labor stability. I don't think that should be their role, is to have anything to do with labor stability. That is corporate America. That's the free marketplace's role to regulate and modify the stability of employment. And the problem with it is even over the course of the last 6 years and 5 years since of QE, you've put $4.7 trillion into the market to try to lower interest rates for corporate America, to borrow money, to help borrow, to borrow more money to put into their business. And corporate America borrowed the money They didn't put it into employment, though. They did it. They did stock buyback programs, and they did mergers and acquisitions, and they're stockpiling cash, and they're investing the money. But what they're not doing is hiring full-time employees.
That's right, and I agree with you. But that's not the world we live in. I agree that the better provider of labor market stability would just be the free market. But for whatever reason, and I have my own thoughts, but I'm going to ask you about this.
Let's say though that the Fed, let's give the Fed the responsibility to regulate the labor market. Okay.
Okay.
What have they had any success doing? In the 13 recessions since the Great Depression in 1930, 13 recessions. It has never taken longer than 18 months for labor to correct back down to the 3 to 4% range. We're now over 5 years. We're like 66 months since the end of the recession, and labor has unemployment above 6%. And that's after they're manipulating all of the numbers by not including the people who can't find a job, don't have a job, but aren't receiving benefits. The real number is like 17%. So if their responsibility is to regulate labor, what the hell are they doing?
Well, what they're doing is they're padding the pockets of institutions on Wall Street.
And they know it.
See, here's what's happening, and this is what we have to acknowledge as an American people. And I don't think we will, and I'll tell you why I don't think we will. What's happening is they're creating an environment, the only environment they know how to try to stimulate. And it's built on the back of the idea of the old trickle-down kind of theory, where if they can let corporations and banks make lots of money, then they will lend, and that will encourage business, and eventually that encourages employment. The problem is that companies are just learning to do more with less, and they're taking more advantage of people, in my opinion. And some of that is the individual's responsibility. And I'll give you a great example. I read a study about this, Matt, last week. I did something on Twitter, Facebook. I posted the article. It was really interesting. Did you know that most people who even have a good job, full-time, get benefits, they don't even use their vacation time?
Listen, we're back to nasty labor environments where people are. It's not the corporations that are taking hours away, making them spend more time at work. People are scared. People are paranoid. They don't even dare take the appointed vacation time that they deserve, because they're paranoid. Yeah,
and we do it to ourselves. And I think a lot of it is this idea, and it's a corporate culture that I've seen over and over again with people, that if I leave my project, it will fail, and then my boss will put me on the cutting block at some point when the economy gets bad. And I think it's just absolutely crazy that we let corporations control us to that type of degree where we can't even step away and work on other things. And I was talking to a group earlier today, Matt. Even taking your vacation, that doesn't mean you have to go sit on a beach, even though a beach sounds great, with a drink with one of the umbrella drinks. That sounds great. Take your vacation and work on your business. Work on a second business. Finish a project at your house, whatever.
Absolutely.
Just don't let the company that you work for control every moment of your life. One of the things I love about trading, and a mindset I've adopted since I've been around Robert Kiyosaki, and I have to credit him because he has really opened my eyes and my mind on these topics, is that your freedom, you get to take it back. And your time is the most valuable thing you have. We here at the Trading Justice podcast, we talk a lot about trading. We're both traders. But I think at the core of it, we're entrepreneurs first.
Oh, absolutely.
Because if we stopped trading today and we opened up a taco stand, we would make it successful.
Guaranteed.
I would.
Guaranteed, because I'm a hell of a chef.
Well, I was down at the taco stand. I was thinking about taco stands. I was down there last week. I ate my first lengua taco last week.
How was it?
Do you know what lengua is? It's cow tongue.
Oh, that's delicious.
It was delicious. I have to admit, it was absolutely delicious.
That sounds as bad as poop flavored yogurt.
It was awesome.
Never mind, I won't say that one. But coming back here to kind of the Fed and whatnot, at what point can anybody in history point to these types of monetary policies where you have such a literally a zero interest type setting? Has this ever worked long term for an economy? Ever?
The word hubris. To me, that describes it so well. Just absolute arrogance and a belief that their authority and power will maintain and control things that they just simply cannot control. They're stacking up cards, and they just keep putting more cards on, and just the belief that that's what they're supposed to do, and they won't back away from it. And it's completely doublespeak in this sense, is that you'll hear them talk about unemployment and the labor market conditions. And in one breath, they'll say, the labor market's doing great. Look at the unemployment rate. And the very next paragraph, if you read these things that they put out, they'll say, well, underlying labor conditions still remain troublesome, and that's what they're talking about.
We've lowered the unemployment rate by 0.6%. We're down to 6.1%. That's fantastic. We've been targeting 6% for a very long time. We're almost there yet. But you know what? We're going to keep an easy monetary policy, because if you actually, this is the small print underneath. If you actually look at what's going on in the labor market, it's actually about as bad as it was in 2008.
Yeah.
I mean, they don't say that. And that's kind of the Fed talk that just kind of drives me absolutely crazy. Like even on Friday when Yellen gave her speech, she basically said this: we will raise interest rates if the labor market data tells us we should, and if it doesn't, we'll be willing and ready to support the economic recovery. And then, like 30 minutes later, Posterous gives a speech and says, yeah, I'm thinking we're going to raise rates in about second, third quarter 2015. 30 minutes later, Yellen says, no, we're looking to continue to support the economic recovery. I mean, it's like literally their entire game plan is just a bunch of just, how bad can we confuse everybody?
Mm-hmm. Yeah, I think that they do intentionally. An Orwellian, logic and language is probably one of the most over-quoted things to say. I say it all the time. But it feels like that. It
makes you sound smart.
Well, I mean, if you never read 1984, go read it, people. Your brother, your older brother, Chris, he recently read some books from high school. I was talking to him about this. He went back to read some of the books from high school that we probably didn't get at the time. Yeah. And I thought that was a really cool idea. Just think of all the books that you just didn't have the life experience to really appreciate.
Well, I'll tell you one book I've never read, but I'm going to read over the next 2 days, is a book called Atlas Shrugged by Ayn Rand.
Yeah.
And I obviously know all about it, but I've never actually read the book. And Ayn Rand has had such a influence on, people like Alan Greenspan, and obviously Greenspan and his predecessors, Bernanke and Yellen. That the influence from that, objectivism, I think it's called, and basically self-interest has had a huge influence on central bank policy over the last 2 decades. And that's kind of what I see in terms of the Fed, in terms of this self-interest misguided policy, in terms of first, protect themselves, protect their legacy, protect what they started, and two, give Wall Street the self-interest all it wants. And it's driving me absolutely crazy. By the way, you'll like this. On Wednesday, economist Mike Kleinhans, he's joining us on the podcast to talk about Ayn Rand's influence on central banking policy, how that type of mentality, Keynesianism and whatnot, how it's a failed mentality. So we're going to do it. I'm looking forward to it. I love that kind of talk. I think it's so important to understand. So that's going to be coming on Wednesday. Hopefully tomorrow we'll be able to get one of our real estate speakers to come on, but that's kind of been up in the air the last few weeks. So we'll see if we can do that. Just throwing out there for a couple podcasts down the road. But coming back to this failed mindset of monetary policy, I can't think of a time in history where printing money has worked. I cannot think of one where the monetary policy was to reduce interest rates to such dramatic levels, increase the supply of money to record levels where it didn't spark hyperinflation and it didn't, crash markets. And I don't see how this is going to change anything for the U.S. economy over the course of the next 5 years. I think we're coming down a very difficult road.
I can't fault institutions for taking advantage of the environment put in front of them. So I've been thinking a lot about this. People get mad at the big banks like Wall Street banks and whatnot.
It's not Wall Street's fault taking advantage of it.
No. So they can twist the arm of the Fed and politicians because they can strong arm them. Why wouldn't they?
Well, and that's why, when people sit there and blame, Wall Street for taking their money and whatnot, first of all, consumers need to look themselves in the mirror. Consumers gave their authority away. Consumers, and honestly, Tim, it was our generation. The generation before us, it wasn't like that. The generation before us, they worked hard, they saved up, they built a house, they put money down. Our generation gave our authority to Wall Street. And it's high time we take it back, but I'm so sick of hearing people blame Wall Street. I'm so sick of hearing people say, well, Wall Street didn't do this, they did this, they were cheating the system, they knew things ahead of time, and that's just a bunch of BS. That's not true. Wall Street took advantage of price action. Wall Street was shorting stock. There's nothing illegal or immoral or unethical about shorting stock in the financial markets. There's nothing that they did that you can't do as an individual investor as well. Consumers need to look themselves in the mirror and accept the fact that they gave their authority away, and either they can come take it back or they can continue the failed mechanisms that have been driving their 401k over the last 15 years. It's their choice. It's their money. It's their risk. It's their responsibility. And by the way, Tim, that's how it should be. It should be our investments. It should be our responsibility or our fault one way or the other. That's just how it should be. So I look at the consumers who blame Wall Street, and it's based on ignorance. Whom they should blame for creating this type of systematic problems where we have bubbled markets is you should blame Alan Greenspan. You should blame Ben Bernanke. You should blame Janet Yellen, and you should blame the central bank for creating a system to where Wall Street, where all the money goes to Wall Street. It is done on purpose. It's their monetary policy that drives this market type mentality and behavior.
I agree with everything you just said, but I will pose a counterpoint just because I want you to think about it.
Okay.
And what if the Fed is just a reflection of what we want as a people? Because maybe deep down, most people just want stable prices. They want stability, and so they want the Fed, because through politicians, what do we really want in a politician? We want a guy who goes in there, supports our interests, and doesn't splash a lot of things around. I know there are some fringe elements in this country that are very opinionated. At the end of the day, most people don't want to hear about Washington politics. They don't want to hear about economy. They just want to keep existing.
They want to
right?
sit down on their couch, pop open a beer, and watch SportsCenter.
Right. And I can understand that instinct.
I can understand that instinct too. And if that's how you want to behave, get ready to lose half your money.
That's right. So maybe we shouldn't blame the Fed.
BS. Let's go on that track. Maybe the Fed is a reflection of what society wants. Okay, let's go with that as a truth, even though I don't think it is. But let's go with that as a truth. So society wants hyperinflation. Society wants the dollar to lose reserve status. Society wants, you said, a steady type of labor force, but the labor force has 17% unemployment right now. What's steady about that? Outside the fact that it's constantly 17%. It's even if that's what society wants, is the Federal Central Bank to create an environment to where all of these things is done, then what in the hell is wrong with society?
Well, I think what it is, Matt, is that it's a lot easier to just chill during times of inflationary measures. We might understand that it's not creating wealth, and that it's a kick-the-can system. But you and I, we've been trading actively for 10 years. We monitor this stuff. Mm-hmm. Think about the average guy or girl or gal out there who just wants to pay their mortgage, stack a little cash, learn how to kayak, whatever.
If that's America today, where all the average person in America, which is 97% of America, if all the average person in America wants to do is just, come home, sit down, give their authority over to Wall Street and the central bank, just as long as they got their Bud Light and their, pay their mortgage and whatnot, they're complacent with that. If that's the America today, I'm going to be like Jim Rogers, pick my family up and move to Singapore.
Well, Singapore may or may not be the right destination. Never been to
New Delhi.
Singapore. But I want think about this then, Matt. We were blaming our generation earlier a minute ago. How many people from your graduating class have started their own business?
I don't know.
How many of them are truly entrepreneurs? If you had to give a percentage.
True entrepreneurs?
Yeah.
1%.
Do you think it was more or less 30 years ago, 50 years ago?
I'll say it was a little bit more.
Probably. I think we've lost some of that American dream attitude.
I think it was a little bit more, Tim.
Yeah.
I think people today are they're so caught up in the day-to-day. They're so caught up in, the stress of life. Everybody that I ever talked to say that they don't have time for this. They don't have time for this. Well, if you want more time, get your money working. Be an entrepreneur, I think a lot of it is the fact that it's not that they don't have more time, is that they're completely inefficient with the time they have. They spend too much time on Twitter and Facebook and YouTube and Google Hangouts, and they spend too much time on their smartphone. And sometimes the best time I have is when I just shut everything down and start thinking for myself and planning my next business and what I'm going to do to enhance this business, and thinking about my trading and whatnot. So there's a weird dynamic, obviously. That's a 5-hour podcast about the American dream and whatnot, but I'll just say from a number standpoint, a lot of people have a lot of definitions for what the American dream is. For example, if I were to say to you, what is your definition of the American dream, what would you say?
Well, to me, it's freedom. It's not about an exact money thing.
Mm-hmm.
To me, because of the way that I've trained my brain and my mind to think about opportunity, it's the freedom and the energy to be able to attack a new project or try something new and know that I can do it. I can fail or I could succeed. You're not always going to succeed, but it's the willingness to just keep pushing and enjoying the journey and hopefully having the success at the end. And I know I will.
And for other definitions, it's to be able to come to this amazing country and enjoy the fruits of your labor. Historically anyways. Another definition is, white picket fence, property ownership, 2-car garage, 1.5 kids. It used to be 2 kids. Kids are expensive these days. Another one, but the actual definition of the American dream, Tim, is every generation will exceed the prior generation in terms of wealth, property, all of it. And for 200 years, we've done that. Every generation has exceeded the prior generation, except Sammy and Kat's and our children's generation. And that's sad to me. And you got to ask yourself, what is the cause of that? Is the cause of that Wall Street? Is it politicians? And I'm sure everybody shares blame here. But I want to, if you had to pinpoint something, is it Wall Street? Is it politicians? Or is it the central bank? Or is it us?
Well, I think some of it is inherently structural because of the nature of global economics, and I don't want to go off on that too much. But I think the dynamics of the globe are, and I don't believe that just because one economy is better, it means it has to take away from another economy. But there are some things at play in the currency markets and whatnot where it may just be that we don't have the same dominance that we did, say 30 years ago. We don't have the same stranglehold over the currency to create a strong dollar and a strong economy. But, we've gone through up and downs over the years. I would probably – I don't like to blame, but I would say if I had to pick one of those things, I think it's the political culture, personally. Okay. I would take that as my first answer.
I think there's an argument for every one of them.
Yeah.
Except Wall Street. I don't think Wall Street's to blame. I think Wall Street is doing the same thing they've always been doing, and Wall Street does what the central bank has given them. If I had to rank them, I'd first say it's the central bank. I would say central bank. And you could kind of tie politics into that as well. But it's the central bank's policies that over the last 20 years that has put so much pressure on the global markets to move away from the U.S. dollar as the reserve status. And that is just, for people that don't understand how massive that is, you're talking about hundreds of trillions of dollars that have to come home when you're no longer the reserve status. Prices of goods and services go at the rate of the supply of the money in the system. And when you have hundreds of millions of dollars that have to come, trillions of dollars that have to come home, that's a big movement in terms of inflation. And so I think that's probably the biggest one, is the central bank's monetary policy since really Alan Greenspan came in the mid-1980s. And the second one, I'd say it's us. I think Americans have grown complacent. I think we've grown stale. I think in terms of our generation, Tim, we really haven't had any major issues to overcome. I mean, yeah, we had the Great Recession. It lasted a year. You know, a year. That's what it lasted from a GDP standpoint. Yeah, we've had the war on terror, but I mean, when you compare what's the war on terror versus, say, Vietnam or World War I, World War II, or anything else that happened in history, I mean, it pales in comparison in terms of like the tragic lives lost. I mean, honestly, outside of what happened on September 11th, 2001, which rocked this nation to the core and changed our mindset. I mean, how long did really, in terms of America, did that really change the way we go about thinking, or did it just make us a little more paranoid?
I think it's a great debate and something I love digging into. Maybe it's an existential crisis, Matt. Honestly, I am not making a joke out of that. It's that we have had so much media and influence, the way that we live our life. We get so much information so quickly that just being a person, it's harder to shape. Mm-hmm. How many people just, that Great Recession thing it was a collective sigh of relief once the market started rebounding, and they went right back into the same thing.
I mean, and not just Wall Street. Wall Street did the exact same thing. The 9 major banks out there, they went out and over-leveraged themselves again, because why wouldn't they? They knew for a fact the Fed would bail them out. Why do you think the market has not had a correction in 3 years? Mm-hmm. 3 years. The reason? Because they know the central bank will bail them out. So why sell? Even though the market the market itself is completely overpriced, it's hyperextended. It hasn't had a correction in 3 years. And you look at that, and why would they? If they know the Fed's going to bail them out. Consumers did the exact same thing, Tim. They come out of the recession, and they're like, ooh, we're scared. We blame Wall Street, but let's go buy that next car. Let's go get that next big screen TV. Oh my goodness, Apple came out with an iPad too. Let's go get that next generation technology right now. Consumers fall for a hook, line, and sinker, and all of a sudden you're now at consumer confidence is not all time, but it's approaching the highs of 2007 before the market crashed. It's everybody's to blame. It's not just Wall Street.
Yeah. You guys are listening to the Trading Justice podcast with your host, Matt Justice, and myself, Tim Justice. You can listen to our podcasts online at tradingjustice.com. You can visit our host, tackletrading.com, pick up the podcast as well, or you can get them direct to iTunes. This conversation, Matt, I love. I really do, because as a trader, market's closed, you're hanging out after hours. This is the kind of time to sit and chat and rap about the markets.
Absolutely.
And so much of the market is with the Fed and tied to the Fed and tied to economy and tied to conflict and everything. One thing I would love to dig into with you at some point is the true cost of that war that we've had over the last 10 years.
Oh, wow.
I mean, and the impact it's really had on economy. I know this would be very divisive politically, and maybe Kleinhans are a good friend.
I could care less what anybody out there thinks. I mean, one of the things that drives me absolute crazy is that if people don't absolutely agree with your political leaning, then you can't have a conversation. When did that start?
It's political correctness at its worst.
It's a worst thing for everybody.
Yeah,
literally for everybody. So if people don't think that they're going to hear politics on the Trading Justice podcast, they're dead wrong. Politics has a direct relationship.
I think that the desire to search out and hunt down every terrorist around the globe has cost us unending amounts of money that I do not believe is justified for the results.
What they don't understand is not only the cost to do all that in terms of the real cost, but the political cost that is weighed on as well. And what people don't understand is there's a reason that the global marketplace is so hell-bent on the U.S. losing its reserve status. There's a reason for that. And the reason for that is our failed foreign policy for the last 13 years.
Yeah, and it's both Obama and Bush.
It's not a right or a left problem. No. It's a political system problem.
Yep.
So
I agree. I want to get somebody like Kleine on. You know, here's the thing. The counter argument would be that evil is evil and you need to stomp it out. You know, and that would be the argument.
Listen, I get that. I agree with that, Tim. But you know what? And sometimes when you live in America, you see everything else as evil. I try to see both sides of it. You know what I saw the other day online? I saw Israel knock down a 12-story building in Gaza. And I'll bet you some innocent lives, not evil people, innocent lives were lost in that.
Yeah.
And I know there's casualty in war. I get that. I understand that. But I also know that we've dropped bombs on children's hospitals in Iraq. Okay, I know we've done that. You know, are there casualties in the war that were unintended? Yeah. But, you know, if you're living in Iraq, Tim, do you like the U.S.?
You can't. I mean,
if you're living in Iran,
a generation of other people who are just going to end up hating you for it. ISIS is just a reflection of that, and that group is very radical.
Oh, they're
Hamas,
nuts, man.
ISIS, the stuff that's going on in the Ukraine.
Yeah, but the stuff ISIS is doing, oh my God.
I don't even want to get into
drop
that.
all the bombs you want. Seriously, get rid of them. I don't care. I saw a story that even Iran was coming into Iraq to help, I think it's the Kurds in the north, you know, seek out and kill ISIS people because they're so far radical. I mean, some of the things they're doing. And I don't know if you can believe everything you see out there, right? But, man, some of the stories that I've read and some of the imagery I've seen, man, I just could not imagine having that much hatred in my heart. Wow.
Well, again then, though, Matt, let's take it back. I'm not a violent person. Never been in a fist fight in my life. I've been hit before plenty of times, deservedly, but I've never been in a fist fight in my life.
Yeah.
Yeah. But here's the thing, is that when you grow up with conflict at its core, because I had the same sentiment. I was sitting with one of my students a couple weeks ago, and I just had happened across a story from something ISIS did, and it just shook me at my core for those few minutes. Mm-hmm. And I was just like, what in the world's going on in this world? Where did all this violence come from? And he said something very smart. He said, listen, Tim, I think violence is deep inside humanity. It's that we have become conscious, and we
very
can
Hobbesian
overcome that.
Of him.
Yeah.
The human nature is nasty, brutish, hawkish, and evil.
Hobbesian, that's right.
Very Hobbesian of him.
And
I have a tendency to agree to a certain extent, by the way. I think at our core, we do. I don't think we have a tendency to go to utopia at our core. I think at our core, we have a tendency to unravel to a certain extent.
Well, and frankly, this does tie back into markets and the Fed. People may be thinking, well, how does what we do in conflict tie to economy? It's directly tied.
It's a global marketplace.
I firmly believe the war on terror has been a big part of why the economy is where it is. The cost in dollars.
Yes. And debt.
Yes.
Yep. I mean,
just
$1 trillion of debt. Honestly, Tim, I keep going back to this, but I truly do believe it. The biggest cost is losing reserve status. That is the absolute number one biggest cost, and there's not there's some correlation between when the war on terror started in 2001. And the U.S. dollar was 70% the reserve status then. Today, that status is 60%. There's a reason China, the BRICS, Russia, there's a reason the Eurozone, there's a reason all of these other countries out there like Australia and Japan are now using non-U.S. dollar transactions in international trade. There's a reason why the Eurozone is moving away from the dollar. There's a reason why the IMF and the United Nations and the World Bank is moving away from the U.S. dollar's reserve. There's a reason why Australia and Japan made trade agreements with China and India to use non-U.S. dollar transactions in international trade. And that reason goes to our failed foreign policy over the last 15 years. It goes to the fact that the world marketplace is 6 sick of the U.S. using its weight as the peace officer in the world. And if you live anywhere else in the world, you're going to think the same thing. Yeah, we here in America, we like to look at Vladimir Putin and say, oh my God, the guy's a radical. He's just an ex-KGB officer. But think about what he's saying. He's talking about equality and fairness in monetary policy. He's talking about, basically a free market without U.S. dollar dominance. And if you're looking at what he's saying in terms of, outside of the Ukrainian situation, outside of the fact that he typically has his shirt off on a horse, but outside of all of that, what he's saying is things that we would agree with here in America if it was an American saying it.
You've been listening to the Trading Justice podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.